Hi, I'm Sarah Lacey, and welcome to Venture Underground. I am going to be the only one here at Venture Underground in the Bay Area next week because my co host and our fearless leader, Adeo Resi, is getting on a plane. He is headed to the Middle East. He is going to be in search of 100 intrepid people who want to become the next great venture capitalists of the Middle East. We are going to talk all about it on this episode. Now, Adeo, you are building a startup of your own right. We just had a breakout quarter in the fourth quarter. There's a lot to prove this year. Like you work 18-hour days. The fact that you are getting on a plane, leaving your startup to go on this trip is not a small thing. Why do you feel so much conviction about the Middle East at this moment that you are voting with so much of your time to go do this trip? What are you hoping to find?
The reality is that there are some entrepreneur and venture ecosystems that are poised for explosive growth, but have not quite hit it yet. So if you look at, let's say, Africa, they're poised for explosive growth, and explosive growth is happening. If you look at Latin America, also poised for explosive growth, and explosive growth is happening. And I'm not saying that explosive growth isn't happening in the Middle East. It definitely is, but it's like in a much earlier stage than what you might see, let's say, in Latin America or Africa right now. And so when you see all the ingredients are there and the beginning of this growth is just happening, it makes it a very interesting place to go because you want to help it get that energy and momentum going right at that moment of inception. I would say in the world today, the place that has the greatest potential and the beginning of the venture and founder ecosystems getting going is the Middle East. And so it's going to be a good trip for me to help introduce some ideas that will help that growth really lead to great companies getting born, great investments being made, and a powerful transformation for the region.
Your hope is that by going there, we can help develop 100 venture funds in the next couple years. Is that right?
I think that we're probably going to do 100 venture funds there, whether I go or not. My goal would be maybe we could get 50 or so funds this year and 50 or so funds next year, and then maybe 50 or so funds the following year. So instead of 100, maybe we're closer to 200. So 100 is really the minimum. I think we're going to get there no matter what. And really, when I look at it, there are three ingredients to a successful venture ecosystem. Number one, you need founders. The good news is the founders are there. Actually, we've done a number of programs through Founder Institute. We've got dozens of startups in the region, but we've discussed this many times in the past. There's this ceiling that the founders hit if they can't raise venture capital. So they can't disrupt incumbents, introduce mass market new products because they just don't have the capital. So the next thing is you need the investors. And I think the governments in the region are starting to realize that they need investors. And like all governments, when they make this realization, they make some missteps. So that's another goal for me to go over there is give some advice to the different ministries and government programs on how they can better optimize those programs to get better outcomes among the companies that they're trying to help. So you want to see more funding, but funding can't happen unless there are limited partners. And so that's the third group, the investors in venture funds themselves. Now, there, the Middle East is in a great position. Most of the limited partners that you're seeing behind these enormous AI deals are coming from the Middle East. Of course, they're coming from everywhere, but some of the biggest dollars are coming from the Middle East. And that's great. I'm not saying slow any of that down, but you can take even a small fraction of that money or new pockets of money and apply it to funds being built and growing in your home region. And I think that hasn't been happening, and that needs to happen now for the region really to take off. because it's got the entrepreneurs. It has people who want to launch VC firms and funds. And now we need to get some of those LPs really saying, okay, instead of allocating into the $500 billion valuation of insert AI company name, I'm going to take some money and also allocate into some of my regional. And by the way, let me double click on this for a moment, Sarah, because this is probably one of the most important things that people don't understand. When venture markets get started, that's when the biggest return happens because there's pent up demand of entrepreneurs that are doing really well, that the second they get a little capital, they like break out. You can look at this equation almost like entrepreneurship over time. Okay. So there's a certain number of entrepreneurs in a given year that build unicorn capable startups. It's not infinite. It's not infinite in the world. It's not infinite in a given region. It's a finite amount. In the Middle East, maybe one or two. Okay. Now, when don't have a venture ecosystem and you start really getting it off the ground, you might have 10 years of entrepreneurs that have this unicorn potential that never got the money. So you have a backlog of 10, 20, maybe even 30 entrepreneurs that once they get funding, they will become unicorns. So it is the best time to be an early venture capitalist in a region and an early limited partner in the region because you catch all that pent up demand. And that's where you get the most unicorns and the most value. And I'm not saying you're not going to get value later on. You will, but you have this higher hit rate, more odds of success in the beginning of a venture ecosystem than you do in the later stages when it's more stable.
Yeah, and that's such a smart point, and as you're talking about that, I'm just remembering there's this era where Rich Wong from Excel just kept going to Australia and mopping up companies. Like, he did the first round at Atlassian, and he did the first round in, like, Prezi. There were all these Australian companies that were so far along and had never had venture investment because there was no strong Australian ecosystem, and he just kept going over there and cherry picking these deals that became, in Atlassian's case, like a $40 billion company, and he did like the Series A when they were huge and profitable. And it's like exactly what you're saying. If someone had come along and started, the equivalent of VC Lab then, they would have had their pick of all of these instead of Excel.
When you look at these regions in the world from an economic development and venture development perspective, you want to look at population, you want to look at available money. So how big is the regional market, all this stuff. The Middle East is probably the largest up and coming market in the world because it's got a relatively large population, a lot of money. It's got all these entrepreneurs. So it is right now probably the lowest hanging fruit in the world for a vibrant venture ecosystem to evolve. However, let me just say that the Middle East has made some mistakes, right? And I don't know if there's a nicer way of saying it. And these are classic like mistakes that lots of ecosystems make. I'll give you like a simple example of one, and then maybe we can discuss others. But it's very zero sum game thinking right now, and that like Saudi Arabia is competing with the UAE. And so, the UAE that has STEP and Saudi has LEAP as their conferences, right? So they're very like, I'm going to be bigger and better than you. No, I'm going to be bigger and better than you. And that's really not how it works. Like, New York isn't like, I'm going to be bigger and better than Silicon Valley. And Silicon Valley's like, New York, we're going to crush them. It's like you have collaboration and maybe a better co-opetition, if you want to phrase it in a competitive light. But in reality, they develop very different styles. The companies that came out in New York that were seminal from the dot-com era to today are very different than the type of companies that you would see come out of Silicon Valley. You had a lot of ad networks, a lot of media companies, a lot of things that shine in New York And then you had a lot of very deep technical companies like, Netscape and things like that that came out of Silicon Valley. And they're in Silicon Valley because that's what Silicon Valley is good at. And that's what New York is good at. And so when you get it very competitive in a region and you're like, no, we want to be the winner, that's not really how life works. So UAE is really in an interesting position to be the financial capital where the venture investors are, because it's a little more liberal, right? It's already got a lot of capital market activity there. So it's really poised to be, let's say, the hub of venture capital. And in many ways, that's what Singapore has done in Asia. If you look over to Saudi Arabia, and they are competitive with one another, it's got a lot of young people, a very big market. It's advancing very quickly, and it looks like some great entrepreneurs are coming out of that region and have been being developed there for a long time. Whereas it's a more expensive in many cases to live in the UAE and parts of the UAE. So you can get like an entrepreneurial hub, possibly in Saudi, and a financial hub with the venture possibly in the UAE developing. And that's a cooperative ecosystem and regional development rather than a competitive ecosystem and regional development. And I think right now they're in this competitive mode, which really isn't that helpful. And I'm not saying there's not good entrepreneurs in UAE. There are, and they're good entrepreneurs in Singapore. But what are the key things that differentiate the markets? UAE is much smaller than Saudi. So you don't have a big home market. It's very hard to start startups without a large market. So UAE could still have good entrepreneurs and be the financial capital. It's not mutually exclusive. And Saudi can have great venture funds, yet lead more in the entrepreneurial space. And that's another thing. Just because you're leading in one thing doesn't mean you don't have anything else. You can have it all. It's just you are really exceptional in one thing and you're maybe good in the others. And I think that's going to happen in the region for sure. And so one of the messages I'm going to deliver is like, hey guys, we got to find a way to be more cooperative in the ecosystem development here, because that will help you to get where you want to go faster.
When I was a journalist, I spent a lot of time reporting in other markets. And there is always this moment where it's like when there's a lot of money and a lot of sophisticated capital, is the best opportunity this capital leaving or this capital staying? And it sounds like that is really going to be the $50,000 question. At this moment, is the best opportunity this capital staying or leaving, particularly with the Middle East, because the Middle East has really become the growth engine torrent of capital coming into Silicon Valley at a time when these AI companies seemingly need $1 billion, $1 billion, $1 billion a second. And there's not endless places that can give them $1 billion a second. And can the argument land that that's not the best use of their capital, but domestic is the best use of forking off some of that capital? And I feel like if that argument lands, all of these other changes will all be in their economic best interest to fix. And if not, they're going to be like, yeah, yeah, yeah. What's OpenAI's next round?
You've hit the nail on the head, but I think like all good questions, the answer's not so simple. The type of money that the AI companies need is very different than the type of money to jumpstart the venture ecosystem in the Middle East needs. I mean, it's many orders of magnitude less. So I think $1 or $2 billion in total from all players could jumpstart the venture ecosystem in the Middle East. $2 billion, that's roughly $20 million per new manager fund, which would be a great start for them. You don't need much more to begin with. So I don't really see this as mutually exclusive. I see this as like, hey, if you want to get a 3 to 5x on a few $1 billion investment, maybe AI is the best way to go today, full stop. There's not a lot of other things that you can put billions of dollars in and get 3 to 5 times your money at this moment in a few years. Now, you can do a lot better in the Middle East right now. You could get a 20 or 100x, but you can't do that on $6 billion. So you can do a lot better, but the sum amount is much smaller. And that becomes a bit of a problem in a very rich area because they have so much money. If you think about it abstractly, $2 to $4 billion for them is like a rounding error on a lot of their investment strategies. And that's why it's also difficult because it's like, look, hey, I know you need to put $200 billion to work this year. All I'm asking for is like 10% or 5% of that to be allocated into developing your home region. And by the way, I want you, instead of saying it must go into your home country, I want you to be open-minded and just give it to managers in the region because the rising tide will float all boats. The returns will be better than what you can get putting in these other big things. So there's multiple leaps of faith that have to be made. Number one, put a small amount. Number two, invest in the region versus just local things. Those alone are going to be very tricky to do.
I feel like the conversation you're gonna be having there is similar to the ones that you often have to coach VC lab companies through when they're talking to institutions, and institutions are like, "What are you talking about? I can't write a $100,000 check, that's too small." It's like you're gonna be kind of in the same situation.
It is going to have to be a fundamental change on how they do things, how they think about opportunities, and they're just going to have to take a leap of faith that if they do this, the results are really going to pan out in their favor in big ways. And so it might take 5 years, but in 5 years they could maybe put 10 billion to work in the local regional market, and in 10 years maybe they could put 20 billion to work. Right? So they'll catch up, but you can't catch up unless you start.
Yeah, otherwise, they're just always gonna be the late stage money here.
I think that would be a terrible outcome for the region. And that's why, if you wanted to say, like, what is one of the big reasons I'm doing this, is that I think if I can go over there and really encourage people to start looking at the great opportunities that exist right there in their home countries, that will start a clock that we just discussed, that in 5 years, they'll be able to absorb a lot more money in the local market, in 10 years, even more, and get great returns locally that they might have expected to see in Silicon Valley. So this will take, as I said, probably multiple leaps of faith. Like, and the last one of three is that if they actually do this, in 5 or 10 years, it will pan out in a really big way. It's a risk, first of all. Like, I could give you lots of data and anecdotal information to make you believe that that risk is worth taking, but it's a risk nonetheless that they would have to agree to take. So I'm going and I'm speaking at multiple events, one in Dubai, one in Abu Dhabi, and one in Saudi Arabia. And then I've arranged a variety of meetings around those events with LPs, GPs, founders, because we have people on the ground there, funds that we've started, as I brought up earlier. So what I really want to do is I want to evaluate firsthand what all the issues are and come back and talk about them, because we can use this as a case study. Because I think the Middle East represents, as I brought up, different parts of Africa, different parts of Latin America, certainly different parts of Asia, that are in this moment where pieces are coming together, and the right type of actions can really help accelerate a bright future. And so let's use this as a bit of a role model, discuss what works and doesn't work, and maybe we can help a number of areas in the world really have thriving venture capital and thriving entrepreneurial ecosystems go hand in hand.
All right. Well, I hope it's a good use of your time. We will try not to burn the house down while you're gone.